Welcome to the AQUIS podcast. We're here in a very special location in the Finance Museum in Zurich. I'm here with Gabriele. Gabriele, you're heading the hedge fund team at AQUIS. You're responsible for the selection of the hedge fund manager. Gabriele, can I ask you, why should investors look at hedge funds?
So we believe that hedge funds is an asset class poised to shine for the years ahead, given a set of conditions that are currently present in the market. If we think about stretched equity valuations, higher inflation regime, and higher interest rates as well, which is very different from the pre-COVID decade. It's not surprised that investors are looking for solutions that should diversify the portfolio and offer uncorrelated risk-return profiles. From this perspective, we are seeing a renewed interest for the asset class. We're happy about it. There are a set of strategies that are particularly posed to benefit from the current environment, and we're just very constructive on the asset class for the future.
Gabriele, hedge funds have not done particularly well in the past. It has also to do with that the beta has just done too well. Why should investors really look at hedge funds now?
Let's start with one step back. So before COVID, there has been a long period, so more than a decade, when interest rates were really close to zero. Central banks provided a huge amount of liquidity into the market, and that was a challenging environment for hedge funds to shine. Why? That is an environment when correlations, especially in the equity markets, tend to be high. And in that case, hedge funds are not really offered the opportunity set to generate alpha through stock and security selection. Now, the paradigm completely changed, and we are seeing already that for the past few years. If you think about a high volatility period like 2020 or 2022, so COVID pandemic and inflationary shock, we can see how hedge funds really delivered the value added to investor portfolios and were a core stabilizer, smoothing volatility for institutional investors and let's say broader investors.
We're here to hear more about the outlook 2025. Gabriele, what are the strategies amongst the hedge fund managers that you find particularly interesting for the coming year? Where do you see the opportunities?
Sure. The current environment really offers a broad set of opportunity sets for hedge funds. And one of the strategies for which we are constructive is the equity long short one. Of course, in this case, we favor managers with like a sector-specific focus, with expertise in-house, which is difficult to replicate at larger houses. And on the equity side as well, we believe that we are close to a turning point on the equity market. And we can forecast and anticipate an expansion in terms of equity and equity breadth, so in terms of leadership of the equity markets. So far we know that performance has largely been driven by the large cap tech stocks, but given the change in the US administration, there is a space, at least, for an expansion in terms of earnings growth, also to other areas of the market, which are not just AI and tech stocks. These other, let's say, areas of the market, if we think about them, is more a value approach or small mid-cap space. And if you think about the US, these companies really generate more than 70% of the revenues within the US, so they should really be at the center of the pro-growth new agenda of the new US administration. But clearly, within the space, we also know that a larger component of the Russell 2000, for instance, is unprofitable. And that's really highlight the need for active management, such as hedge funds that can identify overvalued and undervalued opportunities to generate alpha in this space.
Gabriele, you had recently the AQUIS Investor event where you showcased two hedge fund managers. They presented their underlying strategy, the companies they invest in. It's giving a lot of transparency to the end clients who are investing in your fund of hedge fund. One of the managers was an event-driven manager. What opportunities do you see at the moment for event-driven strategies?
Yeah, I would say event-driven is really one of the strategy in the hedge fund space which can complement long-only solutions, and it's really typical of the hedge fund space. At AQUIS, we have a constructive view on the strategy for 2025 and the years ahead. And that's due to a number of reasons. First of all, we are hearing from investment banks and prime brokerages that there is a wave of M&A activity and capital markets activity in general, which is supportive for the strategy. So these are strategies that can really capitalize on soft, hard events and generate uncorrelated returns to investors. So overall, we still maintain an allocation in the portfolio, and we will try to complement what we already have in terms of merger arbitrage exposure with another manager dedicated to the space that can complement in terms of geographies and strategies. We touched on the capital markets activity and the M&A deals that should be coming after a period of slow activity, so pent-up demand, and that's really one core component. What's driving that is the change as well of the US administration and a stabilization in interest rates. All of these elements combined with a high dry powder level in the private equity sectors. So all of these, it's supportive for the strategy. To access the strategy, it's important to choose the right manager because risks are still there. If we think about cross-border deals, so we just had a few examples last week of deals between US and Canada, which had to be restructured in light of the possible tariffs. So from these perspectives, a sound risk management approach and philosophy is key to access the space.
This brings me to my last question. You have a neutral position on global macro managers. Where are the managers that you have invested, where are they seeing the opportunities? Can you share some trade examples or some opportunities global macro managers see right now for the outlook 2025?
Yeah, I would say global macro managers have the widest possible investment universe, so they can trade relative value strategies across interest rates curves, across currencies, across commodities. So really they have the full set of instruments available to their trades. The last few years have not been easy for the strategy because there have been continuous changes in terms of expectations on investors, and macro data came in and surprised multiple times, especially this year, investors in the inflationary form and on the CPI numbers and let's say on several key macro variables. So all of that generated an environment which was difficult to trade for some macro managers. As always, diversification is key. We can see there are always opportunities for the space for global macro managers, but risk management, also in this case, it's key. So to access this broad opportunity space.
Thank you, Gabriele. We learned a lot about hedge funds, why investors should invest in hedge funds, also about your outlook for 2025. There are many exciting opportunities.
Indeed. Thank you, Caroline. Thank you for all the questions, and really looking forward to the next conversation.